Let me start with you, Erin, because you have been spot on. Your timing has been impeccable in terms of managing risk. But we're near all-time highs, and it feels like we are on the cusp of a major breakout. How do we get there?
So certainly confirmation of what we all expect on Wednesday with the Fed cutting rates another quarter points will help. But I doubt that's really going to push the markets up. It's just going to sort of alleviate any fears that he might do it, like not raise rates. So I think the next thing is having a little more positive news around trade wars, or at least a lack of negative news. And then as we get into for closing in on third quarter earnings, we start looking at the impact of tariffs on third quarter. So this will be mid-October or so. I think that's what's going to push it. People are going to be more reassured about guidance about the rest of the year. And then when we really start looking at 2020. Yeah. So I think it may take a couple weeks before we really get that push.
Right. And that would be typical when we get near these kind of milestones. You just don't crush right through them.
No, I think she nailed it. The market has to get a little bit more clarity on the China negotiations, which will be early October, and as long as they don't get worse, we're okay. I think most people think that if the current level of tariff stays in effect, the economy can handle it. But if they go up from here, it's going to be a problem. So you measure that, and then you'll get third quarter earnings and fourth quarter outlook. And if all of that goes well, you could finally break out to new highs.
Jim, I think that Jay Powell really hurt the markets during some of these FOMC comments. So it won't be the rate cut, but that Q&A period afterwards, right? Once he said inflation was transitory, another time he sort of, he hasn't been good in these. In my mind, how important is it that he suggests or let Wall Street continue to believe that there could be more accommodation?
Well, you can argue that if there's more accommodation, it means that he's seeing something in the economy that's not so good. But on the other hand, if he does accommodate more,
but just take the Mario Draghi approach that the low inflation, i.e., potentially deflation, is enough. Even everything else being okay. Right. That we should do at least one or two more.
Yeah. Well, I think the markets anticipate that, and I think he should leave himself flexibility. And because right now the market has an anticipation for the Fed, if he just does 25 and talks reasonably down the middle of the road, the market is more interested in China and earnings than what the Fed does this Wednesday.
I think he has been just such a disaster on messaging. I'm not expecting him to suddenly have taken all his PR classes and learned how to do public speaking. Right. The market always tanks in those last couple hours, that last hour when he speaks, and then it goes back the very next morning. So my prediction is they won't no matter what he does, he's going to screw up the messaging, and it's not going to be quite right. It might go down in the last hour, and then we'll rebound.
Yeah, the Fed is less important right now as we speak than these other factors.
Well, let's talk about, though, and then we got a minute left, though, the new highs begat new highs. If we do break out to a new high, I got to believe that professional money managers way behind the eight ball here got to catch up.
Yeah, I mean, it's been a better than expected year, and to the extent that you're lagging and the market makes a new high, you have no choice but to jump in. And then the question becomes, do you do growth or value? Because that's the other big change you had last week. Right. And I don't think the move to value is enduring, because for value to work from here, you got to have a reacceleration in the economy.
But you like value.
I like value, and I like the smaller caps, your small and mid caps as well. I think just looking at the potential over, let's say, the next 12 to 18 months, a little more longer term, I think they're going to be the ones that win.
Well, for right now, the Dow's off 121 points. It's not too bad. Erin, Jim, thank you both very much.